Good afternoon, everyone, and welcome to IAB Europe's Economic Trends Forum. This is our first one for 2021, and I am delighted today to be joined by our Chief Economist, Daniel Knapp. My name is Helen Muzzard, and I'm the Chief Marketing Officer for IAB Europe. And for those that are familiar with this structure, we started the Economic Trends Forum at the beginning of 2020, and it was set up to offer market analysis and industry insights to our members. And as you can imagine, 2020 focused mainly on COVID and the impact that that's had on the economy and, of course, on our industry. So for this particular one, we're going to be continuing with that theme. Before I hand over to Daniel, just some housekeeping. This is a live session, as you can see, and as such, we would be really grateful for any questions that you have. We'll be putting those to Daniel at the end. So you'll see at the very bottom of this interface, there's a Q&A box. So throughout, please enter your questions there, and I'll pose those to Daniel at the end of the session. So with that, I will hand over to Daniel.
Thank you very much, Helen, and a warm welcome and Happy New Year to all of you. I'm going to share my screen, which I will use to guide you through my presentation, which should be here right now. It is our first Economic Trends Forum of 2021, but unexpectedly, the future hasn't become more certain than when we did our first one just about a year ago. And what I would like to do today is provide you a first outlook, a first weather forecast on 2021 with regards to digital ad spend in Europe, some of the underlying factors behind that, and also to understand what has really changed during this pandemic. We've spoken about it a lot, about the impact as such, but what has become apparent if we look at the numbers and also the marketing practices that evolved during the last year, that we've kind of gotten a glimpse into the future and kind of a new marketing playbook in the making. So I will try to sketch out the contours of that as well as I comment on what we've learned from 2020 and how that's going to apply to 2021 and also the years to come. So first of all, it looks like Groundhog Day, doesn't it? We were hoping to be out of the pandemic, or that, and when we looked at our first economic forecast from the IMF, it always said that the still fairly gloomy but best case economic scenario depended on no second wave. We're in the third wave. And this is also this kind of optimistic scenario which many forecasters grounded their ad forecasts on. So now we are in a situation where the same topics which in 2020 appear top of the agenda in 2021. So this year isn't radically different. It's a continuation of the themes, and they're here. Number one, first and foremost, COVID has preoccupied our minds, what's happening to our industry, our jobs, and so forth. The identity discussion, critical for the foundation of our industry in the future, but somehow partly delayed due to the firefighting we're to do. And then what is on top of everyone's agenda, of course, is the next medium, the next channel, depending on what your marketing department thinks is top. It could be audio, it could be CTV. So these kind of three themes will continue to confront us in 2021. I, as an economist, would like to focus on the ad spend prospect. And that means that predominantly my interest is what happens in 2021 with COVID, and when we go out of that, and also who are going to be the winners and who are going to be the losers in terms of formats. Then I'm going to look at some of the growth trends that are underpinning the kind of post-COVID recovery and what that means for digital marketing overall. Little disclaimer, it's very early in the year to make any forward-looking statements. Typically, we wait until at least the IMF has published its new economic outlook, but that's only going to happen on January the 26th. So we have a very thin base of data available to do some forecasts. Luckily, we got the World Bank, which just recently came out with some first assessments on overall macro performance in 2021. But bear in mind that forecasts, any statement we make here, it will be changed and revised throughout the year. So my objective today is not to present you with a final verdict on 2021, but show possibilities and potentialities on how the year could develop. And importantly, while we now have a better relationship, a better understanding of the relationship between advertising and COVID, the last 9 months were incredibly instructive, we have new players on the market, new types of advertisers, in particular small and medium-sized businesses. We have new types of players that we didn't really think were in the advertising mix before, which are suddenly starting to become important. So that means we don't really have the historical base to forecast accurately what's going to happen in terms of quantity of spend that we had in previous years. So we need to be careful with that. And lastly, we need to bear in mind that any company reports we draw on here are lagging market development. So when we try to take a forward-looking statement, the data that we have usually resides in the past. With that, let me just restate something I have previously said in other economic trends forums and on other conferences, but now with our final view of the 2020 data. So this is our final end of year late cast, if you will, for 2020, the final IAB Europe verdict on ad spend in Europe. This slide has 3 components. First, let's look at the 2009 factor, where we can see that when the economy is bad, ad spend usually is worse, much worse. It's amplified. If we take that logic, which we've seen in many different recessions, and apply it to an economic model, we'd think that ad spend in 2020 would have been absolutely terrible. The worst year of advertising since the Great Depression in the 1920s. But, and this is the good news, 2020 was not as bad as we thought it to be. A worsening economic outlook throughout the year was not reflected in a worse performance of advertising. And here you can see how we have adjusted our forecast up to our final end of December verdict progressively. We can see that if we look at the top here, we can see digital advertising. In the beginning, we were fairly bleak when we looked at the first lockdown and predicted a double-digit decline for digital advertising, a historical first. Digital advertising has actually never declined in Europe before, not even in the 2009 recession. In August, we were already much more optimistic, having seen results from various companies come in, from ad tech players, from social platforms, from streaming platforms, which already indicated a surprising degree of resilience that digital advertising, now much more mature in terms of ad spend share than in 2009, was exhibiting. But what we're seeing now in our latest data, our wrap-up data, is that the digital advertising did not decline at all in Europe in 2020. Instead, we see a similar pattern to 2009, where ad spend was slowing down, but there was still more spend coming in. Now, this is very different for other media, and we come to that in a little bit, because we see this bifurcation come up now. We see that despite reforecasting progressively, our outlook or final verdict on other media, that includes television, print, out of home, and so forth, has not changed. Overall, it means that the grand total, minus 9%, is actually fairly positive for the market environment that we've been in for all kind of paid media ad spend. What's behind this? So why did 2020 turn out to be better than expected? And answering this question gives us some keys to success recipes for the future of digital advertising. If we learn from why 2020 went well and isolate those ingredients and build on them in terms of business models, service offerings, and so forth, we can turn this difficult year into really a roadmap to unfold the potential of digital advertising. I've grouped this into 3 components: the macro environment, consumer and consumption changes, and then what advertisers have done in terms of investment. There's little we can do about the macro changes. They're one-off, but if we combine in particular consumer and advertiser trends, there's a lot we can learn. The first thing in macro is, of course, in contrast to 2009, where the markets tumbled, we now have a fixed end to the crisis in sight. While vaccination will take a while, we now know that the situation we're in is finite. There will be a way out, and this gives confidence. Also, we had completely different reaction to from the political sectors, from central banks, etc., in terms of intervening to provide liquidity and cash, which might actually, if we look at how much cash has been printed, it might cause further problems down the line. We got extremely high debt in Europe now, etc., but that shouldn't concern us right now. And it helped 2020 and it will help 2021. For the consumers, I reiterate what we have said as IAB Europe throughout the year. Number one, we've seen an explosion of media consumption. Streaming services and screen time overall has increased, and providing new ad opportunities for consumers and rapidly maturing emergent advertising propositions. We've also seen the rapid adoption of e-commerce, which in turn has provided a massive boost to performance ad spend, to social media ads, a massive boost to ads that deliver outcomes, etc. On the advertiser side, we saw something remarkable. We saw many advertisers, after an initial panic button pressing, not cutting ad spend, but actually continuing to invest at higher levels. And behind this is that the key sectors, the key ad sectors, those big advertising sectors that traditionally underwrite the ad economy, were not the worst hit by the pandemic. So if we look at the FMCG segment, for instance, and I have a separate slide on this later, we saw continued decent or actually good financial performance in terms of sales, and they have continued to invest in advertising. Some of the hardest hit sectors, of course, there's travel, but travel ad spend, while big, is concentrated on some segments like search. And also manufacturing, which was one of the hardest hit sectors, isn't really strongly exposed to advertising. And also we saw something else. We saw that the ad spend from the traditional segments that was, or verticals that was stopped or reduced, be kind of compensated by SMBs who have adopted a very different approach to advertising, not seeing it as a discretionary expenditure, but as a lifeline, where we in the ad industry have, through case studies and research reports, always try to communicate that advertising drives business outcomes, sometimes more, sometimes less successfully. But what we've seen in 2020 was actually a live experiment where SMBs, through their investments, have kind of proven that it's advertise or die time, in particular if you don't have a big brand. It is that exists independently from your sales, that advertising and sales are highly, highly correlated. And these factors together have supported the 2020 performance. And if we take note of them, we can help shape 2020 and beyond. Another issue is that advertisers have learned. We have come to have a playbook for the pandemic. And I think this becomes quite apparent if we look at the calculated net impact of the lockdowns. So for instance, if we see here on the left, we can see while overall ad spend was reduced based on the virus being out there, business confidence down and so forth, the lockdown measures, i.e. travel restrictions, shops closed and so forth, amplified that. And we can run some economic models to figure out what was the isolated impact of lockdown measures on a given advertising downturn June 2020. Data is patchy and there's a bit of modeling involved, so see this as indicative, not as the absolute truth, 3 digits behind the dot, but and data here is based on France, the UK, Germany, and Denmark only. But what you can see is that there was a panic reaction in the first lockdown. We didn't know how to cope as the advertising industry. Spend was radically slashed double digit. In the November lockdown, which arguably was less strict and sometimes local, already the picture was quite different. So if we acknowledge that it was less strict and sometimes local, yes, that's fine. But overall, even if that was the case, the ad budgets weren't reduced in line with the measures. And we saw that from several ad tech companies who've reported similar things, that when there was a local lockdown, particularly in digital, ad spend didn't go down, but was maintained. Now we've entered in Europe a period of much more stringent lockdowns, and as it looks like, we'll see them continue probably until March at least. And we can see the effect, at least if we look at December data and the first 14 days of January, we see a stronger effect. And this is really cutting out all the Christmas business boom that we get anyways. So there's now, again, a stronger effect, but because the lockdown is much more stringent. But compare the December and January data with April. It is less than half the net impact they had in April. And that shows that there's more confidence in navigating this pandemic than we had before. And that should encourage us in thinking about ad investments and this and the kind of sustainability of the industry in 2021. Let's take a first peek at 2021. Things are still incredibly shaky. So the IMF, as I said, hasn't published yet, but they have already put out some statements. And it's good and bad news. The good news is that 2020, as I said, was better than expected, but we are entering 2021 in a more difficult time than we had hoped. The first institute to release growth figures, updated growth figures, January forecasts, is the World Bank. And here we can see how the situation looks like. We can see now the final verdict on 2020, a more severe crash in the Eurozone and than in the US, for instance, but then a longer kind of term recovery, providing some more growth potential along the years. If we look at adjustments to the forecasts, we can see that the World Bank has downgraded forecasts, and that the euro area, the Eurozone, is actually the area which was most severely downgraded from 4.5% growth to actually 3.6% growth in 2021 due to the severity of the lockdowns. So this is going to impact ad spend. So we're going to see overall our forecasts are slightly, for total advertising, are slightly lower for 2021. We had to correct upwards for 20, but it's lower for 2021, but it doesn't affect digital. That's the good news. We're seeing some sectors continue to be impacted, and I think this chart shows it quite nicely, that it's in particular the services sector. This could be travel, it could be hospitality, it could be any type of sector. It took longer to recover in the last couple of months, and will also continue to be impacted in 2021. This chart is nice because it shows the time period of impact and recovery for both goods and services, global financial crisis versus COVID-19, and each T here refers to a given month. So we don't have the data for the full year, but it shows recovery cycles. And it's remarkable to see how steeply, for instance, goods dropped, but then recovered, and how long the services issue will continue. And we expect this not to go back to the index of 100 throughout 2021. So when it looks for advertisers, rule of thumb, goods trade is going to recover much quicker. And we already know that different sectors with different recovery patterns. And if we look at this service sector here, tourism, we look at tourist arrivals with data from up to October here, but I think this chart is quite powerful. We can see how far away we are still from normal. On the other hand, though, if we look at what I mentioned earlier, FMCG advertisers, for instance, we can demonstrate, or we can see some remarkable resilience. On the left, you can see from the Q3 results that Mondelez published in October, the commitment to increase working media in H2, to really build on growth and capture market share. And if we look at the organic sales of three of those companies, Unilever, Mondelez, and Procter & Gamble, we can see that they have weathered the storm quite well. And there wasn't a major contraction, in some cases, not even a negative growth at all. So this really bodes well for advertising and will continue to carry us into 2021. We still maintain, based on this information, that digital advertising in Europe is poised for a fast V-shaped recovery. Our latest data assumes that 11.8% is going to be the growth rate for 2021, kind of really compensating for the slowdown we had in 2020. But growth isn't evenly distributed throughout the year. So we saw in Q4 some exuberance. We saw double-digit growth because of the Christmas business, kind of easing lockdowns, or feelings going back into normal. But this growth of Q4 doesn't carry forward into Q1. There's still huge question marks about Q1. Advanced bookings are quite low in different media and also in digital. So we expect Q1 to be quite muted. Now, let's look here at the data on the left. We can see quarter by quarter in the dark purple, the performance of 2020. We can see that there was a singular deep impact for digital advertising in Q2, and already digital advertising continued or returned to growth in Q3. And Q4 was a very strong growth, stronger than in the years before. Now, Q1 is going to be low because of the lockdowns, but then we're going to see double-digit growth. Q1, of course, mainly driven by the highly easy comparatives to 2020. So this is just a mechanical rebound, if you will, supported by the predicted easing of lockdown measures. And then we're moving into double-digit growth territory again in Q3. I now have Q4 at slightly below double-digit growth just because of the tougher comparatives with a very optimistic Q4 2020. Who's going to be the winners and who's going to be the losers? I find it far too early in the year to quantify exactly which digital advertising channel is going to perform how, but here are already some qualitative indications. Because of the rise of e-commerce, and also because of scrutiny on ad budgets, we can see any channel that delivers measurable performance and outcomes is going to win. We also know that omni-channel approaches, connecting different consumer touchpoints, leading to conversions, are going to be critical. We see a return of video brand ad spending. We already saw that in Q3, accelerating massively in Q4, and we believe this is going to continue throughout the year. Some say, or might ask, what happens to CTV here? Of course, CTV is a big opportunity, but in absolute terms, it is very, very small still in Europe. And I will only publish CTV forecasts when CTV industry market participants switch from reporting consumption growth and ad volume growth to actual revenue figures. Before that, it's a nice opportunity, but it remains esoterical. There's some key laggards, and search, which has weathered the past recession quite strongly, is going to be fairly exposed. We see growth, but it's probably going to be flattish, 2 to 4%, mainly due to the travel exposure, and also classifieds and directories, in particular when it comes to jobs and cars. More interesting than 2021 is actually the long-term forecasts. So based on the changed marketing playbook in the pandemic, based on the growth of e-commerce right now and changed consumption habits, which are in part going to stick, how has the opportunity overall changed for digital advertising? It has, our data shows, changed for the positive. I would like to show you here how we saw the future before the pandemic and how we now see the future based on what has happened. So you can see that if you follow the pink forecast, that was my January 2020 forecast for the next 5 years, I assumed that 2020 was going to be the last year that digital advertising in Europe was going to grow double-digit. The market is very mature, and we're going to move just organically into mid to high single-digit territory. This is quite different right now. Of course, we see 2021, again, a mechanical rebound, compensating for the slowdown in 2020. But what becomes interesting is if we look at 2022 and forward. That means that for a longer period of time, we are in double-digit territory or in very high single-digit growth territory. It has to be single-digit in a sense because digital advertising in Europe now is already 56, 57% of all paid media marketing investments. So it has to kind of slow down in terms of growth, just from a budget allocation perspective. But e-commerce and change consumption habits are going to drive more spend to digital advertising than we had previously anticipated. Which means that despite this slowdown in the pandemic, by the end of 2022, already around $500 million more will be spent on digital advertising than we had assumed in January 2020. And this will continue to be around 3 billion more by 2024 than we had assumed in January, driven by the positive effects, the positive transformation and disruption effects that came out of the pandemic. But, and this is very important if we look at the future, we should stop obsessing just about paid media. It is only one part of the equation, and it is also a part of the equation that is not necessarily the fastest growing one. So here's some data from IDC and Group M, which I think really illustrates the issue and opportunity at stake. So paid media here is in the communication segment, and this could be, this is digital, but this is also analog media. So it's kind of growing maybe in line with or even slightly below inflation. And we've seen for a couple of years now that there's a decoupling effect between paid media growth and GDP growth. They used to grow in line, but now paid media is growing smaller than GDP. We had already identified that in 2018. But what wasn't there then, what is here now, is really the rapid growth of the other components, which are by themselves in total still smaller than the communications bit of, which in part is paid media, but in aggregate by 2024 will be around 50% of that. And that is experience design, so websites, for instance, it is commerce, so really linking advertising to purchases, shop design, and so forth. And then there's also technology. And this is broader marketing technology. And some CMO surveys by Gartner and Deloitte and Accenture all indicate that actually right now CMOs are already spending as much or nearly as much, depending on the study, on marketing technology, software and services than they are spending on money going to agencies, for instance. So this is going to be a massive change in the way the marketing world allocates budgets. It has been going in this direction for a couple of years now, but it's now being massively accelerated. That means as an industry, we need to be ready for this, stop thinking in silos. It illustrates the importance of the omnichannel approach. It also highlights where investments are likely going to flow and where legacy players need to transform in order to continue to hold or even grow market share. What the pandemic has also shown is, and that's still very small, but often underappreciated, that there are new creative and immersive experiences on new platforms, which so far haven't really been considered as innovation leaders in advertising. But if we look, for instance, at Fortnite and the Travis Scott concert and other immersive digital concert-like experiences, this is going to become a major opportunity for product placement, for branding, and similar also with other platforms. Roblox, a gaming platform in a sense, where people can create their own games, but also chat systems, which doesn't really market itself as a gaming platform, but as a platform where people connect during the everyday. So the consumption changes that we've seen in the pandemic, the ad industry often just frames them in terms of OTT streaming and video because everyone has their eyes on the CTV budgets. But what we shouldn't really leave out is these other platforms, which often come from the gaming communities or from younger communities, which are growing extremely quickly and are becoming extremely attractive marketing propositions in the future. There is, to conclude, kind of a foggy vision on how 2020 will pan out. My forecasts are likely going to change, but more than that, there are two large unknowns: identity and the Digital Services Act, for instance, which are kind of interlinked. But they all relate to the foundations of digital advertising: what's allowed, what's not allowed, how we measure, how we track, how we attribute performance and spend, which are currently unresolved. And we are seeing now an acceleration of the identity debate, more kind of productive suggestions. We're seeing proposals being put into code already. So it is an acceleration compared to just a couple of months ago, but there's still a long and stony road ahead. And these things are very difficult to predict for 2021. But these are critical things to figure out in order to actually capitalize on the opportunities that I tried to sketch out here based on the 2020 learnings. Another thing that is outside of the pandemic coming into the foreground is advertising is now taking place and will continue to take place in a much more volatile political landscape. So whereas we've seen advertisers embrace a recipe for the COVID pandemic and not be completely startled and not pressing the panic button when a new lockdown comes, this isn't the case for many other things. So a couple of years ago, when the Iron Curtain fell, a couple of decades actually, there was this notion, ill-conceived notion of the end of history. That now everything is following in the capitalist system and everything is going to be, in a sense, predictable and stable. This, of course, was a massive misconception, but it kind of shows that advertising has, for a long time, assumed to run into to operate in a world which was predictable, it was stable democracies, stable economic systems, and so forth. This isn't the case anymore. And just if you look, for instance, at Black Lives Matters, if you look at the recent events in the US Capitol, you can see that advertisers push the button, change how they allocate spend, pause spend, etc. By themselves, these events might be negligible, but there's more education needed in the industry and better strategies on how to weather sudden political storms and to ensure that advertising can continue without just going dark whenever a concerning reality hits the news for a couple of days. 2021 likely impacts what is going to happen by sector or by kind of actor in the value chain. A few thoughts here as closing statements. It seems that publishers are going to become under increasing pressure to demonstrate outcomes. It's not an area that they've historically invested in, but this will become important to capture this e-commerce driven spend. And we're also going to see likely some sales consolidation among publishers. AdTech, which had a very hard time in the public markets for the last few years, is seeing a new love with these public markets. There's a new AdTech ETF out there, which most of you have seen, but I believe that the lasting love relationship really depends on who and how are solutions to identity being delivered, and who can really provide differentiation in omnichannel, and also how can this CTV opportunity, which is appearing as kind of buzzwords in the financial statements, really be quantified. On the agency side, despite strong narratives of innovation, it's pretty clear that 2021 will continue to see cost cutting and restructuring. Advertisers need to make strategic choices on all fronts, really, from identity and a much stronger involvement in that to where do I allocate spend, how do I measure, etc. And lastly, I think there are lots of positive disruption opportunities in the identity space in terms of new platforms for advertising, in terms of providing e-commerce services and so forth. So the landscape of players will probably look quite different at the end of 2021, at least of small players, than at the beginning of the year. So it is going to be a period of uncertainty, but also a period of innovation. And we at IAB Europe are going to continue to monitor this market very closely and provide you with every 8 weeks a regular update on how the situation unfolds. And with that, I'm going to give back to Helen and look forward to your questions. Thank you.
Thank you so much, Daniel. So we're just going to wait for some questions to come in. I've got a couple for you. I think, as most people are aware, when you deliver your predictions, we're all slightly stunned. I need a few minutes just to take everything in. So if anyone does have any questions, please do put them into the Q&A box. And likewise, I've said, if you'd like to ask Daniel directly, just raise your virtual hand. You'll see that you can do that, and then I can pass you on to Daniel. So just before we go to those questions, first question, Daniel. So you talk about the winners and losers for 2021, and you said that it's going to be any channel that delivers measurable performance. Can you just expand a bit more on some of those channels that you think are best placed to do that? Where if someone at the moment is looking to switch jobs, which areas should they be jumping into?
The thing is, the thing with measurable performance is it sounds so objective, but what is measurable and what is performance are, of course, highly subjective. Advertising, despite anything, isn't a science. It's a craft supported by statistics and data, but performance data is often much more subjective than we tend to admit. So that's very important, I think, to bear in mind. Mm-hmm. Then, of course, if you look at the large social platforms, if you look at kind of self-serve platforms that have performance recipes in place, whether they are 100% accurate or not, it doesn't really matter, but recipes in place to demonstrate in particular to SMBs that the ad spend is working, that is a performance channel. I believe programmatic can be a performance channel as well. We need to see how the identity thing is going to be resolved. But any channel or any campaign that can connect the investment to the business outcomes. It could be drive to store. It could be purchases made. It could be items put in the cart and so forth. That's going to be critical to capitalize on the e-commerce opportunity. What's interesting though is that in the previous recession, there was an exclusive focus on performance. Anything that wasn't performance wasn't performing well in that sense. But there's also a reemergence of branding, in particular in video. As I said, we saw that come kind of performance video, and Google breaks out kind of in the YouTube results, kind of performance video versus branding video. Branding video was impacted negatively during Q2, but then made a comeback. And we also know from previous recessions that advertising isn't just about putting stuff in the basket, but also differentiating in the noise. And so we see branding video coming back with probably double-digit growth. I expect 25%. That's up from around, I think, 19% in 2019, actually, this year.
Brilliant, thanks, Daniel. So actually, it's quite interesting because when you were then looking at the growth areas, you're talking about these newer kind of platforms like gaming. You've obviously got CTV in there. And someone's actually asked here, what is your expectation for that out-of-home, digital out-of-home? Will they go with traditional media or with digital?
So I haven't forecasted digital out-of-home yet. I will go through the company results of the Ströers, the JC Deckos, and so forth, but I really want to wait until the Q1 results are in before I make a forecast. Where it's located, saying that's a kind of an ad spend accounting question, and that really depends on the country. So in some countries, it is seen as digital. In some countries, it isn't seen as digital. And I am a strong supporter of what some ad forecasters are doing. I think Group M was pioneering it, but others are doing it as well, to look at kind of pure play digital media. So in a sense, digital channels that don't have an equivalent in the physical world, and digital extensions, i.e. a medium that existed before, like out of home with paper billboards, that is now moving into digital. And that allows us to slice and dice the market according to the needs of the observer. Because a big problem with ad spend figures is that they shape a reality. And if there aren't footnotes, it can be easily misinterpreted. So we will do something similar as well to allow then everybody to piece together their digital world, what they want to have included and what they want to cut out.
Brilliant. Okay, so we've got quite a few questions coming in now. So looking at
but maybe one last thing on the out of home. I know that out of home companies in particular, my last conversations were kind of mid-December, didn't really have a good preview on how Q1 was going to be. So advanced bookings were lagging. And it totally makes sense now with the lockdown. So would be interesting. I haven't done it, but it would be interesting to look at some like the Google Mobility Index, which kind of tracks how many people, how many cars are on the street, and out of home spend. But to make that work, we probably need kind of monthly or even weekly out of home spend. If anyone on the call has that and wants to share that data, I'd love it.
Yeah, send it to Daniel. Okay, so looking at future impacts. Someone's commented that they do seem to be quite similar to the ones that we had last year: identity, CTV, consolidations. So besides e-commerce that you'd also highlighted, are there any other impacts that you hesitated to include but also look interesting?
I had to pick and choose really, and I wanted to put in that first slide just to in a sense acknowledge that these are the three leading debates that are dominating strategic discussions in the ad tech space, that are dominating discussions in the trade press, etc. Things that we tend to overlook in the industry is how the macro political environment shapes advertising. And I tried to put a teaser in there by looking at the panic button approaches that advertisers have taken. I think alongside regulation, of course, which is a big issue, there is a more concerning thing about the, let's say, reliability of infrastructures. And what I mean by that is, if you look now, Donald Trump is banned everywhere. That's probably most would agree that politically that's not a bad thing. But then Amazon was called to shut off Parler and so forth. So we're currently seeing that platforms that are often ad funded are reliant on infrastructures that were previously not conceived to be media as such. And what's going to be very interesting to see, I think, is are there going to be things like must carry rules for certain apps and other things? And how would that impact advertising? So I think there's a big political debate going on about fake news, media pluralism, plurality of opinion, which actually affects apps and social media platforms, but also the infrastructures behind them. I think we haven't done a good enough job to understand what does that mean for advertising. Other things I just briefly mentioned, but I think which are going to be severe, are the restructuring efforts at agencies. Agencies play a very good game in acknowledging where the future is and have fantastic decks on that. But naturally, in a very big company that is made out of hundreds of small companies, execution is often very hard. And I see agencies going to struggle to adapt quickly enough in 2021. Things that I find extremely exciting, of course, is smaller formats like audio, etc., which we had a separate digital audio day just a couple of months ago, which I didn't include here because just similar to CTV, from an overall budget perspective, it is still quite small.
Okay, brilliant. And just go back to your agency point where you said, the consolidation, and we've spoken before about the efforts that agencies have done and need to have much more kind of practical based skills, setting up, helping brands to set up their e-commerce shops, all of those kind of things. Are there any, we don't want to call out specific, but are there any kind of advice that you could give or best practices that you've seen that agencies have started to pivot to kind of hopefully future-proof the model that they have in place?
Well, I think it's really exciting to see some new kids on the block. So we had seen a lot of concentration of spend within the big holding companies. And I think it's really time for smaller, much more nimble shops to contribute to helping clients achieve the digital transformation goals. And lack of red tape, small teams, clear and fast communication, and complementary skills are, of course, extremely important for that. I think one thing that is kind of also overlooked right now is the importance of training and training marketers for the end of the third-party cookie. And that's not just training marketers in identity, but we still have the issue that, let's say, programmatic, CRM, and the cloud are three different worlds with three different vocabularies. So it's still quite siloed. If we really want advertisers to use their to use their first-party data and to make sense of new cloud-based approaches which might come, we need marketers to be ready. We need people in agencies to be ready. And that means we need to start to educate now and hire the right people to be ready for 2023.
Great, thanks, Daniel. So I've got a question here from James from Freeworld. So he says, do you think the pandemic will have a lasting impact on medium share as advertisers have seen success when trying alternatives in reaching their audiences restricted to home?
That's a really interesting question. I think in a sense, I can only say time will tell, because we were in exceptional circumstances right now. And we have seen consumer changes. The advertising world loves stories of innovation and disruption and rapid change because it's wonderful marketing material. But as I have said before, if we look at previous economic crises, change is incredibly hard. And there's a lot of academic evidence that people fall back on previous behavioral patterns. And as lockdowns are still going on, it's too early to say to what extent, particularly new media consumption habits are really going to stick. Mm-hmm. When you can go back to the pub, when you can see friends again, etc. We have to hold our horses here a little bit. What I do see is advertisers are more willing to experiment than they were maybe a year ago. But advertisers are also inherently conservative. So I see, apart from the e-commerce stuff, which I believe will grow continue to grow from a very high plateau, advertisers are going to change incrementally and very slowly. And there will always be, as it has been in the last 50 years, a gap between the possibilities and the consumption changes and where budgets are actually allocated.
Great. Okay, so just a couple of questions about e-commerce. So someone's asking if you've got a view on the scale and growth of advertising platforms like Amazon. And then someone else has commented that this could actually be a significant trend, this retail media. So do you see any other players similar to Amazon kind of making a move in this business? And would retailers come to the media style business?
Again, that's a very interesting discussion, and I think we should have a separate.
I just think there's so much on e-commerce, maybe.
Advertising on e-commerce. I mean,
yeah.
The key thing, and this might also be a question for regulators, is who holds that much data? Who has that much historical data about what people have bought, what they've looked at, and can link that to advertising? So Amazon really is in a standout position here, and we've seen if I look at the data, I've got the spreadsheet open right now, over 40% quarter on quarter or year on year, over 40% year on year growth quarter after quarter for kind of Amazon advertising services throughout the pandemic, completely outpacing everybody else. I think there are other opportunities. I'm not sure whether others want to go into the business like Amazon. I think Shopify follows a very different approach, but of course they're the Chinese companies, major Chinese e-com platforms that are starting to come into Europe. even have started to set up trade associations, but that are very strong in Southeast Asia, that are moving into Africa, and that are moving into Latin America. So I think there is a lot of potential there, also outside of Amazon, but there's of course a strong concentration within the Western world there. Nevertheless, I mean, opportunities exist, and that is for agencies, how to set up a store, how to link it with advertising, what's customer lifetime value, what's the customer acquisition cost, and really combining consultative and data science approaches with advertising execution and the experience design and how should the shop look like, etc. I think that is quite exciting, but yeah, we should do a separate trends forum on
definitely. I think e-commerce will be, yes, one of the ones we do. So just another question here. So we are living in uncertain times, which obviously we're all aware of. The pandemic has really double crossed our plans with the change of the identifying system. So cookies obviously being depleted. How can you see the impact of this on our industry? And actually, that is a very good question, because your predictions that you've put in place, have they obviously, I'm sure they have counted this particular, the depletion of the third-party cookie into those plans.
So let me tell you a secret about predictions. The simpler the assumptions, the more accurate the predictions. I've in the past tried to build models on the growth of mobile advertising that took into account subscriber penetration, 4G usage, and tens of other variables, and it was less accurate than a prediction that looked at 3 or 4 factors only. Mm-hmm. So I haven't specifically accounted for the impact of the depletion of cookies, because there are too many uncertainties. And if you introduce a variable in the forecast that you can't really control or quantify, the forecast turns into garbage. And the purpose of the forecast, again, is not to describe the future accurately, but to provide a perspective on how it could look like based on what we know today. So I've only included things that we can know today. However, although there are from everyone severe concerns about the future of identity, will we be ready? What will happen to ad spend? I am more optimistic, being slightly removed from the nitty-gritty. We should never assume that because something is not possible anymore, that ad spend will completely change, because there won't be any other alternative. We can't go back to the world before. The world before doesn't exist anymore for targeting. And advertisers want inference. They want to have conclusions about what's going on, how they allocate their budgets, and how they perform within the tools and methods available at the day. And once everybody understands there is no going back to the other world, and we only have the methods at our disposal that we do have, I don't think that budgets will be changed, because people will learn how to make inferences about the effectiveness and the usefulness of ad spending on the basis of different data and approaches.
And that ties very well to one of the questions that we had here, which was asking, have there been any sign signals that advertisers are getting a second round of cold feet with the new variants of COVID-19 that were impacting the UK in particular? And I think you answered that earlier on, Daniel, that there hasn't been, advertisers have had the opportunity from the first lockdown to test, learn, and actually that spend hasn't stopped as we maybe saw it the first time around.
Yeah, of course. There are exceptions to the rule. And what we've seen is that advertisers behave much less like a cohort, like everybody in one vertical behaves in the same way, but that the products are much more individualized than they've ever been before. So we can't really say all automotive companies are cutting spend, or all FMCGs are continuing to invest. There are huge differences between companies. It's much more individual now in terms of what's my risk profile, what can I control, what do I dare, what are my business objectives, than in a previous recession. However, overall, we can say that despite more severe lockdowns, the risk of cutting the budget in a panic mode, as in April last year, is much lower. Of course, Brexit is an additional factor, and I must confess I haven't looked at specific advertiser behavior now in January, but just looking at COVID, we can be more optimistic about spend continuing or being cut to a lesser extent than last year.
Great. I always like to ask you for your headline for the year. So if you had to sum up, and I'm putting you on the spot, Daniel, I'm so sorry, but if you had to sum up then one headline for 2021, what would you say for our industry?
Same as 2020, but on entirely new foundations. And I think that is the message. I mean, that is the main message. We shouldn't cast 2020 as this annus horribilis, this extremely bad year, but we've actually seen the future. It was a massive life experiment. Mm-hmm. And instead of hypothesizing about outcome-based media and the value of digital advertising, we've actually been able, against our will in a sense, mm-hmm. to see it in action. And it's up to the industry now to turn that into more than marketing material.
Brilliant. Okay, well, that's a good headline. I think we'll go for that. So just want to thank you, Daniel, for, I know that you put a tremendous amount of work into this and delve everywhere for all of these different stats. So it very much is appreciated. We will be sharing the recording on our website tomorrow, and members will also have a chance to get this deck. So we'll put that into an email. And just to let everyone know, IAB Europe will be, in the next couple of weeks, launching our new digital bootcamp training series. So it's a 10-module course, which will be looking at role and competency-based learnings. It will be taught by Daniel Knapp and our programmatic advisor as well. So it's fantastic trainings that are going, and it really is for anyone that, especially over the last year, has been impacted by COVID-19, and it maybe has impacted their job, they're looking to retrain, or most importantly, retain their current jobs and get that boost in some of their skills. So there's going to be lots of different courses on things like data, the post third-party cookie. So stay tuned for those details, but we're very excited to launch that, and even more work for you to do, Daniel, with the trainings. And
good you mentioned that, Helen, because that's going to be completely hands-on. So the Economic Trends Forum provides an overview. It's theoretical, not applied, but this is completely different format. It's hand-on. It's kind of workshop-based. It's success recipes, instructions, tricks on how you can manipulate data quickly, how you can get insights if you're not a data scientist, how programmatic really works in practice, how to pick a good vendor, what makes a good campaign, and so forth. So I look forward to that a lot, actually.
It'll be very exciting. Okay, everyone. Well, thank you so much for joining us on this January afternoon, and we will see you at our next Economic Trends Forum. Please do go and check the IAB Europe website for this recording, to look at some other events that we've got coming up, and also to book your place on our digital bootcamp. Thank you very much, and goodbye.
Thank you all.
Thanks.
Bye.